Guess what? Warren Buffett has purchased Ulta stock. You might be wondering, why is Warren purchasing a beauty retailer? And also, I've done a decent valuation on this very company just recently. So I'm gonna go through Warren's thesis on why I think he bought the stock, and then also I'm gonna tell you exactly what I think the stock is worth today. So let's get into it. So yeah, Ulta stock soars on the news that Berkshire Hathaway bought up to 690,000 shares. That's about $33 million worth of shares. The investment aligns with Buffett's strategy in a number of ways, including the valuation. See, the thing is, Buffett loves a valuation play, and let's go into it. Let's get into it. But before we do, Shamao says to like and subscribe. So yeah, number one, the reason why Warren bought this stock is, let's face it, he's following me. I purchased Ulta stock. This is my Patreon portfolio, which is my smaller portfolio that you can actually track on Patreon for all my Patreon members. So yeah, I bought $7,000 in Ulta stock just a few days ago. August 7th, I purchased Ulta stock. So I beat him to the punch, didn't I? And guess what? I purchased some more, $500 on August 9th. And I was actually lined up to purchase even more. My position in this portfolio is not filled yet. It's getting close, but it's not filled yet. So I was hoping the stock would stay low so I can fill out the portfolio. So Warren, you have to delay these announcements, man. You got to delay these announcements. Don't just follow me blindly, man. You got to research yourself. Don't just follow me blindly. Okay. Kidding aside, I did make those purchases. So yeah, check out my portfolio on Patreon. You'll see I did make those purchases, and that was proof. So anyway, let's get into it. What's up with Ulta? Ulta, after hours yesterday, is up 14.12%. This is due, obviously, to Warren's purchase. Now, what's going on with Ulta stock? You can see here the stock has been a roller coaster. It used to be above $500 per share. In fact, their 52-week high was $574 a share. Now it's trading, well, before the announcement, Ulta was trading at $329 a share. Okay, so here's the thing. Ulta has an extremely low PE ratio. Look at that, 12.84. 12.84. Normally, value plays like Ulta, value stocks, slow growth value stocks usually have a PE in the range of about 20. Growth stocks usually range about in the 40s. So why is Ulta at 12.84? It's because Wall Street is extremely pessimistic on this stock. And frankly, they're priced to shrink. The company is priced to shrink. And there's a couple stocks in my portfolio that are priced to shrink, not just Ulta. But Ulta is one of them. So yeah, they have a market cap of $15.7 billion. You'll notice also they have a forward PE of 12.79, so it's even better. And a price to sales of 1.43. So what's so special about Ulta? I mean, they're a beauty retailer. What's so special about that? They have about 1,400 stores in America, and they're growing. Actually, let's get into that in 1 second. So the key thing about Ulta, the one thing that differentiates Ulta from other beauty retailers and other retailers in general, I say, is their steward way of applying capital. Look at their ROIC charts. Their return on invested capital currently sits at 30.9%. So that means for every dollar they put in, they get a return on the investment immediately of 30%, 30.19%. That is extremely high, especially amongst this field, especially amongst any field. I mean, look at this. They are in the top 10% of their own industry. And at 30.9 is also greater than its 5-year average, 24.86. Now keep in mind, this 5-year average actually included previous years when they were expanding faster. They've slowed their expansion rate. Now, why is their ROIC so high? How can they get so much money for each invested piece of capital? The primary reason is they are selective on their stores. They're selective on their store locations. They don't expand just willy-nilly going, oh, I'm going to gobble up 500 stores this year. I'm going to gobble up 1,000 stores this year. No. they're purchasing about 60 to 65 new stores per year, and then they're remodeling 40 or remodeling or moving 40 to 45 stores per year. So actually, you can see their store count here. This is quarter over quarter, and it's just a very slow trend upwards. But the thing is, these stores are in prime locations. So that's the thing here is since they purchase so few stores, they can pick the best spots for these stores for that year. So that's why their return on invested capital is so high for this stock. And they're just an efficient company in general. They spend money very well. Now, currently, they're also only in America. So we're going to go in that 1 minute. Also, what's another reason that Warren could have bought this stock is there's this thing called the lipstick index. It sounds a little silly, but it's a thing. So the lipstick index says people buy more makeup when times get tough. So the idea is, why buy this Louis Vuitton purse, when you're in economic crisis, when you can just buy makeup instead? That's the idea on that one. So yeah, the lipstick index is the theory that sales of affordable luxuries rise during economic downturns. So the idea here is that it's a hedge against a recession. This could be a hedge against a possible economic recession coming this year or next year. The phrase was coined in the early 2000s by Leonard Lauder, heir to Estee Lauder Cosmetics. It played out during the 2008 recession and the pandemic, and it seems to be happening now, too. So what's the other thing? As I mentioned, Ulta operates about 1,400 stores in America, and I think they're going to cap out at about 1,700 stores in the United States, so they need to find expansion plans elsewhere, outside of America. And yes, I call the United States America. So yes, their next location is actually going to be Mexico. It was Canada. It's now Mexico, where they're going to expand to next. Now, the estimated beauty market in Mexico stands at $9.46 billion. And yeah, they got nice looking stores as well. So yeah, what's the makeup of their product lines? You have cosmetics, skincare, hair care, fragrances, and services, and other. And obviously, the biggest ones are cosmetics and skincare. Now, let's get into the numbers. This is their previous quarter's numbers, financials. The net sales were $2.7 billion. Now, the only real negative with Ulta, and this is why their stock plummeted recently from $575 a share to $323 a share, is the comparable sales, the same store sales of 1.6%. However, this is a temporary issue, and it will correct as the economy sort of corrects itself. So that's temporary. Don't worry. I'm not concerned about that in the slightest. Remember, I bought the stock knowing this. And so did Warren. Warren Buffett bought the stock knowing this. So yeah, gross profit's 30.9%. SG&A is actually increasing pretty significantly to $665 million. And then you can see the new store openings last quarter were 10, and diluted earnings per share were 6.47. So the earnings are declining a little bit due to these temporary issues. So yeah, let's get into the numbers themselves. You can see here their income statement. Not really much to say. Most of this was in that previous slide. And yeah, most of that's in the previous slide. And then here's their balance sheet. Now, again, the best stocks in the world, my favorite stocks are those with zero debt. And Ulta has zero debt. I love that. So yeah, you can see it all right here. Zero debt. I like it a lot. Let's go on to the next one. So yeah, we have the statement of cash flows, which looks good here. It's about what you would expect with a company growing at its pace and spending money wisely. Again, they are spending money wisely. Now, what's their outlook? Their outlook, actually, they decreased their outlook for the year this last quarter. They decreased this year's outlook from basically same-store sales of 4 to 5% to 2 to 3%. And then the other numbers changed accordingly as well. However, they did not change their new store count or their remodelings for this year. But we went over most of that. Now, the cool thing is that the company, during the first quarter of fiscal 2024, the company repurchased 588,000 shares of its common stock at a cost of $285 million. That actually exceeds Warren Buffett's share purchase. Well, on a dollar basis, a little bit less on the share count. As of May 4, 2024, $1.8 billion remained available under the $2 billion share repurchase program announced in March 2024. That's the other thing, is I love companies that are buying back their shares because this boosts earnings per share, which boosts our ownership stake in the company. So how's their financials look? I mean, you can see here, obviously, their biggest quarters are fourth quarters, as you can expect. And they're just growing substantially year after year after year. I mean, the growth has been steady. Outside of this last quarter's sort of results, growth has been steady. Here's their statement of cash flows. Their cash flow is exploding. $1 billion last quarter alone on a $15 billion company. A $15 billion company having free cash flow of $1 billion is crazy. It's crazy. Their PE is so cheap. So cheap. Here's their history of buybacks. You can see they're buying back about $300 million of stock per quarter. Okay, so I'm now going to get into my DCF valuation. So what is DCF? DCF stands for discounted cash flow, and it is what you can use. It's one measure of valuing a company. And basically what it does is it says that a company's value today is the sum of all of its future cash flows discounted to the current price. So you have this discount rate. And the discount rate is how you discount the future cash flows to the current price. And that's basically how it works. And it helps to determine the value of an investment based on its future cash flows. So here's my DCF. And this will tell you exactly how much I think Ulta is worth today. So I'm going to give that to you today. So yeah, what's Ulta's history? Obviously, there's the COVID crash in 2021 where they were down 60.8%. But revenues rebounded in 2022, up 40.3%, slowing to 18.3% in 2023, going down to 9.8% in 2024. And you can read the rest if you like. And capital expenditures are going up because they're opening new stores. And yeah, that's it there. Okay, so what do I predict? So what I did here is I think this is a conservative model. This is how I predict that Ulta's going to perform in the future years. And I just pegged them at a 6% growth rate over the next 10 years. Now, again, this is actually lower than the average of the last 5 years. Much lower, significantly lower. So I think this is a conservative estimate, and this is my base case. I'm base casing them on this conservative estimate of 6% growth per year. This can be achieved in multiple ways. Either same-store sales can increase, or the new stores can it's a combination of same-store sales and new stores. You combine those together, and then you get their growth rate. That's basically how it computes. So you can do it one of those two ways or both. And if you were to put that into graph form, here it is in the graph. So I think that's easily achievable. That should be easily achievable for Ulta. Again, they are an efficient company and they run operations cleanly. Remember, their ROIC is enormous. So they know how to spend their capital and they know where to spend their capital. So that it gives you a terminal value of $30.5 billion, which is a present value of terminal value of $15.4 billion, enterprise value $23 billion, and then basically, in the end, you get a implied stock price of $469.32. And this is the perpetual valuation model. I also have a multiple valuation model where you get an implied stock price of $450.06. However, I'm going to give you a bonus. Now, this DCF valuation model is on my Patreon. If you want to download this spreadsheet and get all the calculations, or if you want to make adjustments to those numbers, if you want to test it, say at 7% sales or 2% sales, 2% CAGR, 1% negative, whatever you want, you can just download the spreadsheet, plug in the numbers, and it will tell you your implied valuation for Ulta stock. Okay, so the thing is, Ulta, my conservative case for them is $435.46. My base case is $459.69. My optimistic case is $524.84. So again, if you want to know the numbers that went into each of these, that's on the spreadsheet. So yeah, my Patreon portfolio starts at only $5. Now, not only do you get the DCF valuations and the corporate analysis, actually those are a little bit more. Those are for the higher members. That's only $25. But for $5, you can follow my Patreon portfolio. My Patreon portfolio dictates all my purchases, all my sales on that portfolio earlier. And this is the same thing that Warren Buffett follows. If Warren Buffett follows it, shouldn't you follow it? So yeah, don't forget to like and subscribe. Thank you for watching, and I'll see you in the next one.